Hello, friends. DK Sinha this side. The US stock market crashes in the last week. If we see the S&P 500 index, it witnessed a major fall of over 4% in the single week. While Nasdaq 100, the tech stock index, had even fallen more. It had fallen by nearly 6% on a week-to-week basis. So this becomes the worst week for the year 2024. Should we be fearful in the stock market? No, friends. In overall uptrending market, such major fall is the normal thing in the trending market. Yes, we should be cautious, and what we can do, either you or me, we can only do the in-depth analysis of the price action in S&P 500 and Nasdaq 100 and set our stance very clearly with respect to the critical levels in the market. If a certain level breaks down in S&P 500 or Nasdaq 100, the market would be seriously bearish. So in this video, we'll undertake the comprehensive analysis of S&P 500 and Nasdaq 100 to determine the possibility and the support and the critical levels in the upcoming week and even beyond. So friends, don't forget to like this video, subscribe the channel, hit the notification bell for updates. Let's begin. Before we do the technical analysis on the price chart, let us understand what is the fear and greed index is telling us to know what emotion is driving the US stock market. When the last week ended, the fear and greed index is reading at 39. So it is in the fear zone. If you recall, 1 week prior to the last week, it was in the greed zone and it was reading 62. And 1 month ago, it was reading 23. So it was in an extreme fear zone. So it is a kind of oscillator. Whenever the corrective wave is under formation, the market participants become fearful because they witness the fall in the price. And whenever there is a formation of the impulsive wave, then the market becomes greedy or extremely greedy in the process. Because ultimately, the market makes wave formation. The structure in the uptrending market would be higher highs and higher lows kind of market structure. In this area, participants become fearful when the market corrects. And during this phase of the market, when it is forming impulsive wave, the market participants becomes greedy or extremely greedy. So this is a kind of oscillator. So let us now straight away move to the price chart to undertake the technical analysis. This is the price chart of S&P 500 index in weekly time frame. The index finally in the last week closed at 5,408.43 and thus it was bearish by 4.25% on a week-to-week basis. Let us first understand the price action. In the prior week, there was a formation of a hanging man candlestick pattern, which indicated the exhaustion of upside momentum in the market. And what has happened in the last week? There is a formation of bearish kicker candlestick pattern in the last week, indicating the weakness in the market. But in the process, what this index is indicating? The formation of a double top. So the lowest point between the two tops becomes this, which is nothing but the lowest point it has made in the month of August 2020. So the moment price breaks below this important level, the market structure itself will be broken down. Up till now, the market structure is higher highs and higher lows kind of structure. The moment this level is broken down, then the market structure would be broken down and there'll be breakdown of a distribution chart pattern, that is double top chart pattern. But if you see the overall price action, this becomes itself an independent impulsive wave. What has happened here? Here the market gapped down, but the bears could not push the price further down and the market recovered and formed a impulsive. So if I superimpose some of the technical studies, is there fear of a bear market? So the market has made the all-time high of 5,669.67. So it has to fall 20% or more from this important level. So it has to fall below this level for market to be defined as a bear market. So it has to finally fall below 4,530 level. The possibility seems a little remote. Why? Because as if now, this was the rounding pattern kind of structure which gave a breakout. And the neckline is here, which is above this important 20% drawdown or more drawdown in S&P 500. But if we see the price action recently, what has happened? This becomes the independent impulsive wave. The price currently is quite in proximity of EMA 21. If you see the price action here closely, the market is struggled here for 2 weeks in a row. So this area becomes a very important area in immediate terms. And that area is 5,344 to 5,371. And at 5,371, there is an existence of a gap. And the lowest point of the August month is 5,190. So by and large, 5,119 becomes a very critical important level in S&P 500 index, below which the market would be severely bearish or breakdown of a distribution pattern. Let us go to the daily price chart to undertake the price action analysis further. What we can see, during the recent fall, this particular gap has been filled. But there is still a gap which exists over here at 5,371. So this becomes the important support zone. So if we do the retracement analysis of the prior impulsive wave, let us do the retracement analysis of prior impulsive wave. It has already broken down below 38.2% retracement level, which itself shows the weakness. So where is the golden ratio? The golden ratio exists at 5,300 level. And this is practically a very important level with the price-based resistance. So major support exists at 5,277 to 5,300 level is the major demand area. And if you draw this demand area, there is a confluence of SMA 144, where earlier also price has respected this important intermediate term moving average. Where could be the potential resistance immediately? Now, since the price has given a breakdown of 38.2%, so immediate resistance would be at around 5,450, and the next level of resistance would be 5,522. So this becomes the important supply area immediate term in S&P 500, which will face a resistance in the upcoming week. Now let us move to the price chart of Nasdaq 100 to undertake the technical analysis. Let us first go to the weekly price chart. What we can see in this index is, in this index, the index closed in the last week at 18,421.31, and hence it was bearish by 5.89% on a week-to-week basis. So this index was weaker than broader market index S&P 500 in the last week. And there was a gap down opening and the price finally closed below EMA 21 and volume weighted moving average 21 period. Now, if we do the further analysis, this was the important area of resistance. Price faced resistance for many weeks and finally it gave a breakout. And then after a breakout, it took support over here. It took support over here. Although the price traded below, but that was a gap down opening and finally market recovered and there was a formation of a bullish candlestick pattern. So based on this price action, this area becomes very important area from 18,077 to 18,280 is the immediate demand area in Nasdaq 100 index. Can we draw one trend line? Watch it carefully. I am drawing this trend line, which is very, very important and projecting backward. Why backward? To understand the price action. This was the area of resistance. This was the area of resistance. Post breakout, it became the support. It became the support. And here too, price did not close below this. Gap down opening, but market recovered immediately. And this trend line is falling within the demand zone that we have discussed from 18,077 to 18,280. And 18,000 itself becomes the psychological support in Nasdaq. Now let us go to the daily price chart to further understand the price action. Nasdaq 100 on a short-term basis came in the downtrend. EMA 21 crossed under EMA 55 and the market structure was lower highs and lower lows kind of market structure. Is this correction is taking place to form some kind of reversal chart pattern? So there could be two possibilities. One, the price corrects to this important level, which is the low of August 2024, forms the double bottom and then breaks out this apex of the double bottom and the trend resumes, that is the uptrend resumes. Another possibility is I am drawing one trend line. This is the trend line which is acting as a dynamic resistance, price rejection, price rejection. So market goes like this, confirms the demand area that we have discussed, which has an intervention of SMA 200 also over here. So it recovers and gives a breakout of this counter trend. There could be this possibility. I am drawing one more trend line to understand the price action better. This is the rising trend line. Price rejection, price rejection. What does it indicate? If at all it is forming an inverse head and shoulder, which is a reversal chart pattern post short-term downtrending move, then this is a possibly rising neckline. Those who are beginners in the stock market, let me draw and explain to you. This is the left shoulder, price went up, head formation, and probably it is correcting to come here and then give a this kind of breakout. And the price might take support in this demand area, which has an intervention of SMA 200 also, and then give a breakout of a rising neckline of upcoming inverse head and shoulder. There are always two kind of possibility. Either it forms the double bottom or forms the inverse head and shoulder. In either way, it confirms the trend reversal. So what do you think, friend? Whether the US stock market defends the low of the August 2024 and will remain in the uptrending move, or will it give a breakdown of the distribution chart pattern that is upcoming double top, especially in S&P 500? I'll be waiting for your comments and your opinion, feedback in the comment section of this video. Thank you very much for watching. Looking forward to meet you very, very soon.